Hi, I'm Brad Kinkler, Lead Portfolio Manager of Global Value Strategies at Barrow Hanley Global Investors. Barrow Hanley is a global specialist focused exclusively on value investing. We do one thing and we do it well. Barrow Hanley was founded in 1979. We're based in Dallas, Texas, and we currently manage over $50 billion for pension funds, endowments, foundations, sub-advisory arrangements, and wealth management platforms. We currently have over 100 employees, over half of which are investment professionals. We have a 4-decade history of organizational stability, which has developed into a uniquely consistent client base. In fact, we have over 40 clients who have been with Barrow Hanley for over 20 years. All of this is based on Barrow Hanley's dedicated, specialized skill set, a consistent value philosophy, and a disciplined process utilized through multiple market cycles. We believe we have a differentiated global value equity strategy focused on building attractive asymmetrical returns by adding alpha in both up markets and down markets. That's a pretty difficult goal to achieve, but hopefully I can summarize how we do that in the next few minutes. It's a high conviction portfolio with high active share over 90%. We think of it as a best ideas portfolio where we want to exploit the widest opportunity set and the greatest market efficiencies by going to where the value is, regardless of sectors, regardless of industries, regardless of geographies. We do this by building a disciplined, consistent, and repeatable philosophy and process founded on excellent fundamental stock analysis and bottom-up stock selection. When we look at the value landscape, we can typically divide the market into 2 different types of companies: those that are more cyclical and those that are more stable or more defensive. Clearly, every company falls on the spectrum between those 2 extremes, but we'll talk about those 2 buckets just to simplify it. Deep value strategies tend to have portfolios that are dominated by the cyclical companies. These strategies typically do well in a risk-on environment where market expectations for strong economic growth. Defensive value strategies tend to have portfolios that are dominated by companies in the stable and compounding earnings categories. They typically do well in risk-off environments when you're concerned about slowing economic growth or recessions. Barrow Hanley's traditional value style is positioned to keep you in the game and hopefully generate alpha in a wide variety of value cycles. In doing so, we hope to avoid the boom-bust cycle of alpha generation seen in many value portfolios. You can think of it as we're trying to keep you in the middle of the road. Although we want to use the entire center lane by migrating through bottom-up stock selection. Sometimes we'll be a little bit more defensive, sometimes we'll be a little bit more cyclical. But even when we are at our most defensive positioning, we're still not as defensive typically as defensive value portfolios. Even when we're at our most cyclical, we're typically not as cyclical as deep value strategies. In that way, once again, we're trying to keep you in the game regardless of the cycle and trying to add alpha through a wide variety of value cycles. Over the last 14 years, technology and growth has dominated the returns in equity markets. It's easy to forget in markets like this that the next decade typically does not look like the last decade. The market moves in cycles, some longer, some shorter. This has been a long growth cycle. When we look back in time, you could see 1980, the largest companies in the world by market cap were US companies and a lot of oil companies. By 1990, it was Japan and Japanese banks. By 2000, we were back to the US with tech and media companies. By 2010, we were back to China and oil. In fact, to highlight how far we've come in the last decade, In 2010, the fourth largest company in the world was BHP Group. That was only 11 years ago, but it's hard to imagine that situation today because for the last 14 years, we've seen US and tech dominate. What will markets look like over the next decade, by 2030? We don't know. But it's probably going to be something different than what we've seen over the last decade. In fact, as you look back over previous decades, you see that there is somewhat of a rotation between value and growth and value and growth. So the next value cycle, we expect that Barrow Hanley will be well positioned to continue adding alpha versus peers and benchmarks, just as we have done since 1979. Thank you for your time, and thank you for your business.